In 1934, a banker named René Bertrand walked into a Zurich courtroom carrying a leather briefcase. Inside were the names of French citizens hiding money in Swiss accounts. The French government had sent him to testify. The Swiss government had other plans. When Bertrand opened his mouth to speak, Swiss police arrested him on the spot. His crime? Violating a banking law that had been passed just months earlier. A law that would transform Switzerland from a poor Alpine nation into the world's financial fortress. The briefcase was confiscated. The names were never revealed. And Swiss banking secrecy was born in blood and betrayal. This is another story where money, power, and history collide. And nothing is ever as simple as it looks. The official story of Swiss banking secrecy sounds almost noble. Switzerland, a small neutral country surrounded by warring powers, needed to protect its citizens' privacy. Banking laws were simply an extension of Swiss values: discretion, stability, and respect for individual rights. The 1934 Banking Act made it a criminal offense for bank employees to reveal client information. Violation carried prison sentences. The law applied to everyone from tellers to bank presidents. Switzerland marketed this as financial privacy protection. Banks stamped confidential on everything. Clients received numbered accounts instead of named ones. Swiss bankers developed a reputation for saying nothing, remembering less, and asking no questions about the source of deposits. The world saw Switzerland as a safe haven for legitimate wealth. A place where privacy meant protection, not concealment. Where banking secrecy served honest citizens fleeing political persecution or economic instability. That story was a lie from the very beginning. Swiss banking secrecy wasn't created to protect honest citizens. It was designed to capture the world's dirty money. The 1934 law coincided perfectly with the rise of fascism in Europe and the Great Depression's global financial chaos. Rich Germans hiding assets from Nazi confiscation didn't choose Swiss banks by accident. Wealthy French citizens evading taxes didn't stumble upon numbered accounts by chance. American millionaires dodging Depression-era regulations didn't randomly pick Zurich banks. Swiss financial institutions actively recruited these clients. They sent representatives to Berlin, Paris, and New York with a simple sales pitch. Bring us your money, and we'll make it disappear from official records. The mechanism was brilliantly simple. Clients would travel to Switzerland carrying cash, gold, or bearer bonds. They'd meet with private bankers in wood-paneled offices overlooking Lake Geneva. No paperwork crossed borders. No records existed in home countries. Money vanished into the Swiss system like water into sand. Banks assigned numbers instead of names to accounts. They used coded telegrams for international communications. They developed elaborate procedures for accessing funds without revealing ownership. A client could deposit $1 million in Zurich and retrieve it in Geneva using nothing but a number and a signature. Swiss banks didn't just hide money. They multiplied it. They offered investment services that were illegal in other countries. They created shell companies that existed only on paper. They developed financial instruments that turned dirty money into clean investments. By 1939, Swiss banks held an estimated 40% of all foreign-owned assets in the world. Money flowed in from every continent and every conceivable source. Nazi gold sat alongside Jewish flight capital. Soviet Communist Party funds shared vaults with American robber baron fortunes. The beautiful irony was that Switzerland's famous neutrality became a marketing tool for financial corruption. The country that claimed to take no sides was actually taking everyone's side, as long as they paid the fees. Swiss bankers developed a peculiar form of moral blindness. They could look at a truck full of gold teeth and see only bullion. They could examine blood-stained currency and notice only denomination. They could process diamonds torn from dead fingers and calculate only carats. The system worked because it served everyone's interests except the truth. Politicians in other countries could publicly condemn tax evasion while privately moving their own wealth to Swiss accounts. Law enforcement agencies could investigate financial crimes while Swiss banks destroyed the evidence. Newspapers could write about corruption, while Swiss privacy laws prevented them from naming names. World War II turned Swiss banking secrecy from a profitable business into a matter of national survival. Nazi Germany demanded access to Jewish accounts. The Allies threatened sanctions for hiding enemy assets. Switzerland navigated these pressures by expanding secrecy laws rather than abandoning them. The country that claimed neutrality was actually choosing sides based on account balances. Swiss banks accepted Nazi gold while freezing Jewish assets. They processed payments for German arms manufacturers while blocking Allied access to German funds. They laundered concentration camp loot while denying survivors access to family accounts. After the war, Swiss banks faced a terrible reckoning. Survivors arrived with deposit slips and death certificates, seeking access to family accounts. Banks claimed the accounts never existed. They demanded death certificates for people murdered in concentration camps. They required documentation that the Nazis had systematically destroyed. The banks had a simple defense. Banking secrecy laws prevented them from confirming or denying the existence of any accounts. They turned their greatest crime into their strongest legal protection. American investigators estimated that Swiss banks held over $500 million in unclaimed Jewish assets. The banks claimed the number was closer to $32 million. They offered to settle for amounts that wouldn't cover the cost of their lawyers' lunches. The scandal should have destroyed Swiss banking secrecy. Instead, it strengthened it. The Cold War created new demand for financial hiding places. American corporations needed to hide payments to overseas dictators. Soviet officials wanted to stash Communist Party funds in capitalist banks. Third world leaders required safe havens for foreign aid money. Swiss banks marketed their World War II experience as proof of their discretion. The same institutions that had hidden Nazi gold now advertised their ability to protect client assets from any government, any investigation, any moral scrutiny. The modern offshore banking industry was born in the rubble of Swiss moral compromise. The names have changed, but the behavior hasn't. Today's offshore financial centers use the same basic techniques that Swiss banks perfected in 1934. They offer numbered accounts, shell companies, and legal structures designed to hide ownership and evade taxes. The Cayman Islands, Luxembourg, and Singapore have replaced Switzerland as the world's primary financial secrecy jurisdictions. They've learned from Swiss mistakes by spreading the system across multiple countries and legal frameworks. Modern money laundering doesn't require a single briefcase carried across one border. It requires thousands of electronic transfers across dozens of jurisdictions. Cryptocurrency has become the new Swiss banking. Bitcoin offers the same promise that Zurich banks made in 1934: complete financial privacy with no questions asked. The technology is different, but the appeal is identical. Make money disappear from official records and reappear wherever convenient. The Swiss model proved that financial secrecy is not a defensive tool for protecting legitimate wealth. It's an offensive weapon for attacking the rule of law. When banks can hide money without consequences, crime becomes indistinguishable from commerce. Every major financial scandal of the past century has Swiss roots. The Iran-Contra affair, the BCCI collapse, the Enron fraud, the 2008 financial crisis, and the Panama Papers all traced back to techniques that Swiss banks pioneered. The institutions that promised to protect wealth ended up corrupting it. Today's Swiss banks operate under stricter regulations, but the fundamental problem remains unchanged. Any system that prioritizes financial privacy over legal transparency will eventually serve criminal interests. The difference between legitimate tax planning and money laundering is often just a matter of perspective and prosecution. The world's richest individuals still use Swiss-style secrecy to avoid taxes, hide assets, and escape accountability. They've simply moved their money to jurisdictions with newer laws and better marketing. The people who control the world's money don't need to break the rules. They just need to hide from them. Switzerland taught the world that neutrality is not the absence of moral choice. It's the presence of profitable moral blindness.